Good Monday morning and welcome to Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Dustin Hobbs, Communications Director here at the California MBA, and it is July and we're continuing our conversation with some of the top legal minds in the mortgage industry. We're talking about litigation, legal, regulatory trends in the industry today, and I think we've had some great conversations so far, some good practical takeaways for lenders and what they can do to mitigate and reduce their risk, what cases and trends to look out for. And I think we'll have another good conversation here this morning. But before we do that, let's thank our sponsors over at Incelerate. So Incelerate helps lenders close more loan through better borrower engagement. The mortgage industry's most innovative customer experience platform delivers lead management, sales enablement, engagement, a robust mortgage-specific content library, and data intelligence all in one comprehensive and highly scalable platform. Incelerate delivers dynamic technology, strategy, and content for every channel of your business to ensure engagement throughout the customer journey, whether that be with your borrowers, referral partners, or any other party to the loan transaction. The dynamic enterprise solution seamlessly fits into your tech stack, whether that's your phone integration, your POS, LOS, servicing system, or data enrichment, due to the advanced API connectivity, modern design, and open architecture. So gone are the days of managing multiple and separate systems like your CRM, your marketing automation, lead management, and having your data trapped in those silos. The innovative platform at Incelerate allows you to provide your internal and external customers timely, relevant information based on data intelligence to build repeatable outcomes at each stage of the customer's journey. So bottom line, close more loans, improve borrower conversions, enhance customer retention, transform your customer acquisition life cycle, I should say, and create customers for life, which I think is the bottom line for everyone in the industry right now. So for more information, visit Incelerate.com, or you can contact them at the number listed in the description below. So before we jump into the conversation, I want to toss it over to Susan Milazzo, our CEO, for this week's weekly update. Susan.
Thanks, Dustin. Hi, this is Susan with the California MBA, and this week I'd like to talk with you about our Western States CREF Conference happening September 8th through the 10th in person at the Aria in Las Vegas, which is a new venue for us this year. We're pleased to be welcoming for our keynote luncheon presentation, Willie Walker, CEO of Walker & Dunlop, interviewing Bill Hornbuckle, CEO of MGM Resorts. And a big thank you to our keynote luncheon sponsor, Archway Capital. If you're in the commercial real estate finance industry, this is the event that you do not want to miss. You can register before the end of July and take advantage of our discounted early bird registration rates, as well as get into our hotel room block. I look forward to seeing you in September in Las Vegas. Back to you, Dustin.
All right, thanks, Susan. Now let's jump into the conversation. I'm excited to welcome in a friend of the association. He's been a member for quite a while now and been very engaged in our conference planning for our legal issues conference, and he's been a part of our legal issues committee for a while now. He actually serves as the secretary for the legal issues committee. Jarlath Curran with Severson. He's a member with Severson and Werson, and also, as I mentioned, secretary on our legal issues committee. So, Jar, welcome.
Thank you. Glad to be here.
Yeah. Well, let's start out at the beginning here. Tell us about your background for maybe those that don't know you yet. Tell us how you got involved in the industry. What drove you to become a litigator, and what brought you to where you're at Severson.
Sure. So initially, my path wasn't on the way to litigation. I actually went to college to be an engineer. I got my bachelor's in science in civil engineering. My dad was a nuclear engineer, worked for SoCal Edison at the power plant down in San Onofre. So as a kid, that's just what I knew, right? My dad was an engineer. I'm just going to go ahead and be an engineer like my dad. So I went to LMU, Loyola Marymount, to get my civil engineering degree. About halfway through college, thought, this might not be for me in terms of a career in engineering, but still stuck it out to get the degree. One of my older sisters, she was and is a practicing lawyer. She does plaintiff side medical malpractice is her specialty. So I was familiar with litigation through her. Seeing what she did, it seemed like a good career to have. So switched my focus, during college to I'm going to go to law school afterwards. So went to law school. At that time, given my engineering degree and kind of the more math science side of things. I thought maybe my career would take me down to intellectual property or patent law, maybe tax law, something like that. But out of law school, when I was applying for jobs, my first job was doing mostly mortgage defense at Wright Finley and Zach, which I was a member of the CMBA, an active member of the CMBA. So I started there doing mortgage defense, and I enjoyed it. It was good. Moved over to Severson, a few years later in 2008, and into their financial services group. The group is large. It has a lot more than just the mortgage defense. It covers really anything financial services wise: auto loans, bank operations, credit cards, checking accounts, debt collection, credit reporting, TCPA, privacy, all those sorts of things. So when I started out, back in 08, it was more of a mixed bag. It was sort of half mortgage, half all the other things that the financial services umbrella will cover. And then, of course, mortgage crisis hits us, and lawsuits start flowing in like a tidal wave, and the focus really got in the mortgage law. And it's been interesting. It's been pretty crazy at times with lawsuits back then and adjustments that were made, given federal regulations and California legislation for the California Homeowner Bill of Rights, the HAMP program, the National Mortgage Settlement, all these things that have been going on for the past over a decade. So it's been interesting. That's so a bit of a windy road of how I got here, but I'm glad I did.
Yeah, well, never a dull day too, right?
Right.
So do you think that, I'm just curious, I actually didn't realize you had a background in engineering. Do you think that as you mentioned, sort of that math and science background, did that help as far as, thinking rationally, thinking, strategically, and, sort of in a scientific method or scientific way when it comes to approaching mortgage law?
I think it did. A lot of the engineering training is all about problem solving, just kind of figuring out, at least in terms of engineering, is what facts, what elements do you know of the equation, and how do you work the equation out to solve the problem, and engineering and all the math that goes into it. So it's similar to law. If you're defending these claims, they all have elements. Okay, what are the factors that go into these elements? And at least from the defense side, how do I attack it in terms of problem solving? So that kind of mindset, breaking it down into its elements, I think did transition pretty well from civil engineering over to litigating.
Yeah, that makes sense. So obviously this last year has been, to say the least, an interesting year, a challenging year for many people, for everyone. I mean, whether or not you were touched by the pandemic personally, or whether or not it just made your work and personal life just challenging, whether to figure out what you're going to do with kids and working from home and all that. So just from your perspective, what was the biggest lesson you learned, whether that's professional or personal?
So I think the lesson kind of goes both personally and even to the industry, professionally wise, is how quickly people adapted to an unprecedented time. I mean, it's Monday, I'm in the office every day, working up these cases, litigating these cases, helping out clients. And then all of a sudden, Tuesday, I'm 100% at home with my laptop. And, the attorneys aren't there with me, the staff's not there with me. It's just a different world. And, it was impressive, as a firm in Severson, how it sort of turned on that dime and maintained, the level of advocacy and work product that is, these clients deserve, when everyone just kind of scattered. And it's similar to what the industry did in terms of, once this hit and the CARES Act comes out, and there's all these additional requirements and these forbearance programs going out the door, and these borrowers who are, losing their jobs left and right, and the industry turns on a dime and pretty smoothly goes into assisting these borrowers when its staff, all the people that are doing the work, are scattered everywhere. And when this first happened, back in April or in May, I thought there's probably going to be a bunch of lawsuits coming out the pipe, later in the year, summer and fall of last year, with servicers just trying to figure out how to navigate through these waters, but it really hasn't been too terrible in terms of litigations. It hasn't been that many. So I think it's a testament to the industry about, how it can maneuver itself and adapt itself to just a crazy time. Maybe the mortgage crisis, from 10 years ago or so, got them warmed up and ready to go for something like this, because it was impressive, that the way the industry helped out its customers so quickly and was able to adapt to it.
Yeah, no, I 100% agree with you. I think that the experience in 07, 08, 09, and even a couple of years even beyond that, I think the servicing departments and just the speed with which that industry responded to consumer concerns, I think you're totally right. I think that was built on, I think those processes were constructed at many companies were constructed in those years after the financial crisis and during the financial crisis, and I think that they've paid dividends now. And
Right.
to your point about everyone shifting on a dime to working from home, I mean it's amazing. I shudder to think what would have happened had this all happened 10 years ago or 15 years ago, when not every company was built to. I mean, very few companies were built to, work remotely. I think that would be an interesting, now that I say it out loud, that would be an interesting study to see, is how many companies built their work from home strategies or kind of built up to being able to work from home just in the last, 5 years or less. I think that, a large percentage of companies have just recently gotten themselves technologically up to speed where they could do something like that. And even like 5 or 10 years ago, they would have been in a real dire straits.
Yeah, that question back when it was really changing last spring was, I got that a lot with, wow, imagine if this happened 10 years ago. Imagine if it happened 15 years ago, what would you do? You couldn't do it. I mean, no one was really set up, or I wouldn't say no one, that's pretty broad, but most companies and most industries were not set up, I wouldn't think, to make that change so quickly.
Yeah. What's your thought now that we've kind of gone down this rabbit trail a bit? What's your take on where the legal system is at right now? Are they kind of getting back up to speed? Is there more stuff happening in person, or is it still kind of all happening virtually, and the backlog's still there, or is it starting to be relieved a bit?
Well, the backlog's still there. I think most counties, the trials that haven't gone forward in the pace that we're going forward a year and a half ago, I think that's pretty much everywhere, but it's getting there. Most courts are starting to move to the point of allowing more personal appearances. Trials, they're changing rules and protocols, allowing more courts to house these trials and get the trials moving along at a better pace. I mean, nothing like how it was before pre-pandemic, but it's getting there. It's in that transition phase. So, which is nice. It was a weird time when there was no hearings and no trials and nothing. It was just an odd pause button. So I'm glad we're out of that and moving forward slowly but surely to get back to as much of normal as possible.
Yeah. Same thing with the advocacy side of things here in Sacramento with the legislature. They're slowly starting to get back to something approaching normal. But yeah, for the last year, our lobbying team had to do everything remotely, and so many times it was you talk to our lobbyists and, well, I'm in a parking lot somewhere talking to staff from one of the authors of the bill we're working on. It's a very strange world that we all went through. So. Speaking of litigation here, so what, from your perspective as a litigator in the industry, what's the most important trend to watch this year, if I'm a lender?
So I think probably the most important, it's pretty good topic right now, is the amendments to Regulation X that the CFPB put out just last month. That are adding a few things for servicers to do before they can actually move forward with foreclosure. So all this is largely based on these forbearance plans that were approved last year are coming to an end. The CFPB's final rule that they issued last month had some interesting information in it. There was something of hundreds of thousands of borrowers that were in these forbearance plans are just now coming out of them, or ending them, or exiting them. And then it's, I think, 900,000 more are anticipated through the end of fall. So you got millions of borrowers who haven't made a loan payment. They've been forbeared on these payments for a year to 18 months. That's just a lot of people. And what are the servicers going to do with all these borrowers coming out of these forbearance plans and navigating through these additional requirements that the CFPB put out? So that'll be interesting to see. I think that's going to have some litigation in it. I think that's going to go on probably for a little bit longer. These regulations are in effect for the most part end of August to go through the end of the year, but some of it is in effect until October of next year. So it's a bit of probably a longer trend. A couple other smaller ones that I've been noticing. One is, at least in my practice, there's a lot more issues with the properties themselves in terms of health and safety code violations and lawsuits brought by cities or counties against borrowers and lenders to deal with these maintenance problems. And they've filed the lawsuits, they've tried to get receivers appointed, things like that. I've seen an influx of that. I think it's largely due to moratoriums. Lenders aren't foreclosing, lenders can't evict, so these properties are getting dilapidated. And it's a bit of a tough spot because if there is someone living at the property, they're the borrower or squatter, you can't evict them because of the moratorium. So these properties just get worse and worse. And they're not necessarily the most complicated cases, but they're tedious and time consuming and can get expensive. These receivers get a lot of discussion from the court on the work they do, and they can't put liens on the property to reimburse them for their time that is senior to the mortgage loans. So lenders have a balancing test of, okay, do we pay for this and add it to the loan? Do we let the receiver go and possibly put a lien that's senior to ours? How much equity's in the property? So a lot goes into it, but I've seen that percolate up quite a bit, and moratoriums are kind of sunsetting now. So that might end, but it's been increasing. And I think it might increase at least for the near future. And one more topic that I see kind of percolating. I'm curious to see where it goes. Is the issue of call recordings and borrowers requesting call recordings in a qualified written response. And so far, the industry stance is these are, among other objections, these are confidential and proprietary, and they're not something that they would give in a QWR response. And there's some lawsuits going on now saying that objection is meritless, and failing to provide a recording is a violation of the QWR statute, and of course there's statutory damages that come along with that. So that one's interesting. I don't think either the property maintenance or the recording issue is as long-term really as the CFPB rules are, but they're trending out there and they're percolating. I think those are, at least for the short term, something we're going to see.
So with I'm really curious on the maintenance one. Do you see that? I know after the financial crisis in 2008, there was a major blight issues that went on for years and years and years because of similar issues. I mean, just the extended period of time it took to, and the fact that it was extending even then to go through the default, foreclosure, and eviction process. So you don't see that necessarily as a long-term trend right now, more of maybe a short-term headache?
I would think so. A lot of the stuff I see is the REO properties. So it's bank owned and they just can't evict and can't access the property. Once the eviction moratorium is over now, that they're going to start hopefully either getting getting the eviction process going and accessing the property to fix it, or just selling it out of REO to a private investor, to a private individual, and have them deal with it. So it's a couple options. These servicers are not necessarily property managers. They service loans. They don't want to manage properties, so they'll get these properties off their books as quickly as possible, I would think.
Sure, that makes sense. So are there any big cases right now that you're keeping an eye on as they move through the courts?
So I think the biggest that at least affects in terms of the defensive servicers for my practice is the Sheen case that's at the California Supreme Court. So as you know, this is the case. Basically, it's the issue is whether or not a servicer owes the borrower a common law duty of care when it reviews a loan for a modification, as opposed to being just a contractual arm's length transaction. It's been an issue for years. I think this is even with when the mortgage meltdown was, a decade ago, this is one of the causes of action they brought. You negligently handled my modification, and they bring a claim for negligence against a servicer. So courts are split. Most courts have been on the industry side saying there's no common law duty of care. But we'll see. I mean, that would be, if it comes down on the industry side of it, it's kind of like closing the book on a back and forth argument that's been going on for a while. And then if the Supreme Court comes down on the borrower side, then the plaintiff side of it, then that's just going to be opening the floodgates to more of these lawsuits.
Yeah,
that one's going to have an impact for sure.
Yeah, I can't imagine what that would do to servicer processes. I mean, I don't think the heads of servicing and compliance are going to get sleep for months on end if that ended up going on the plaintiff side. What's the? Do you have any idea timeline-wise when that's supposed to be decided? When we can expect a decision on that?
If you had asked me 6 months ago, I would have said, 3 to 6 months. So I don't know, I guess is the main answer to that question. Hopefully in the next 3 to 6 months, we'll get oral arguments scheduled there. So
just keep saying 3 to 6 months. Eventually you'll be right.
Yeah, I stick with that, and and you'll forget about my prior, false claims of how quickly it'll happen. Yeah, no one's gonna do that.
So if I'm a lender listening to this, what, from your perspective, what's maybe the most underestimated litigation threat out there?
This is a tough one. I think industry-wide, the lenders and servicers they have their finger on the pulse of what's going on, so they're ready for it. I would say, maybe this call recording issue, because it's sort of new, may not have hit the radars on a lot of the servicers and lenders out there. But it's one to keep an eye on out, because that does make a difference on how servicers respond to these QWRs, and it even goes to responding to discovery and litigation for call recordings. Are they, is this going to come down to the point where they're saying, no, these are not confidential and proprietary? That impacts litigation as well. So it's new, so I think maybe that might be underestimated, but I think it's probably going to get some traction, and they'll start paying more attention to it as it goes down the line. It's still early.
Yeah. Well, then if I move from maybe the C-suite at a lender to the compliance or a QA department, what's maybe one thing right now I can do to reduce my risk, either on the call reporting issue or on something else?
So, the big thing that's coming, we touched on before, is these CFPB amendments, and I think my main recommendation would be to go beyond, what's being asked of the servicer in these amendments, if possible. A couple examples. One, they define a borrower who's having a hardship from COVID as either directly or indirectly related to COVID. Indirectly is a broad term. You can think of a lot of things that indirectly affect you. So in these situations, be over-inclusive however you can to really put more in the bucket of indirectly related to COVID than maybe you first initially think, just to make sure you're not dealing with claims of borrowers saying you didn't help me when you should have. Another example is some of these additional requirements require phone calls, direct calls to the borrower and discussing what their options are, describing the options, giving detailed specifics of what those options entail. And that's great. And usually they're on phone calls that the servicer will notate these in its servicing platform. But the requirement doesn't include anything about a letter, any confirming letter or anything in writing. And I think it's due to the fact this was sort of a quick, emergency situation where they're not going to have the servicer start all these processes and protocols for drafting letters. But if you can, I would say you should. And the reason being, in my mind, when these claims come down these lawsuits are filed, what ammunition do I have in my arsenal to defend it? I have the note logs where the calls are documented, which is great. Call recordings of the calls, fantastic. But then you have a letter as well. You have a written letter saying, pleasure speaking with you. As discussed, here are possible options, and you list them out and you describe them, which servicers have been doing already, but do those in these instances as well, because then now I have a letter. I've got a document that I can put on a declaration that I can have in court, in addition to a note log and a call recording. It's just doing a little extra, a little more than what's necessarily required to give you that extra line of defense, and hopefully avoid the risks down the line. Or if there is a lawsuit filed, then we've got a bunch of evidence to dispute whatever it is they're claiming.
Yeah, maintain that paper trail and keep it abundant. It sounds like.
Right.
Yeah, makes sense. I think that's good. A good practical takeaway for listeners here. So we're down to the last question here, last couple of minutes. So I know that you've been a big supporter of the California MBA for a number of years. You actually participated. I forgot to mention this at the outset. Jar was a former participant in our Featured Leaders program. Yep. And so he's been certainly involved in the association for a long time. And so I'm curious from your perspective here, if you're speaking to someone who's not yet a member, I should say, what's your take on why it's important for firms and attorneys like you to support the advocacy and grassroots efforts of groups like the California MBA or even the National MBA?
Well, it's an extremely valuable source of industry information. I mean, both what the industry is doing, and more specific to me on the litigation side, what claims are going out there, what statutes are being drafted by the California legislature, what's in the pipeline. Luck favors the prepared. So being able to go to the legal issue webinars, to the conferences, the Future Leader program, where you network and you meet different people in different areas of the industry, so you can kind of just accumulate the information you need, at least from my perspective, to defend these lawsuits and to advise lenders and servicers on how to deal with several things that are happening now and things that are happening 6 months to a year from now based on what the legislature is doing, which is, it's just incredibly informative, necessary information if you want to be able to practice in the area, in my opinion.
Yeah, no, I appreciate that. Yeah, I think that's again good advice for folks out there who maybe are not yet a member. So Jar, hey, appreciate the time today. Good to see you. Hopefully you see you in person later this year at one of our conferences now that we're starting to open back up. And if someone wants to get in touch with you for information about what you guys do there, how can they best reach out to you?
So first, Dustin, I appreciate it. Good to see you as well. Hope to see you in person soon. So to get in touch with me, you can email. My email address is my initials, J, M as in Mary, C as in cat, at severson.com. Severson is SEVERSON.com. Or you can call me. My number is 949-225-7943.
All right, we'll make sure and put that in the description as well. And if you enjoyed the conversation here, make sure and subscribe to us on our YouTube channel. You can also find us on SoundCloud, Spotify, and Apple Podcasts. And we'll be back again next week for our final July episode of Connect. We'll see you then.